Is TD Bank, that familiar green logo on seemingly every other corner, a smart place to park your investment dollars right now? Forget the usual "Hey guys, welcome back to the channel." Let's dive straight into the heart of the matter because your money deserves thoughtful consideration, not just another generic stock analysis. For years, TD has been a banking behemoth, a staple in the Canadian financial landscape and a growing presence in the US. We're talking about a company with a massive customer base, a history of solid performance, and a reputation for stability. But in today's dynamic economic climate, past performance is no guarantee of future returns. So, the real question isn't was TD Bank a good investment, but is it now? Several factors come into play when evaluating a stock like TD. Let's consider the current macroeconomic environment. Interest rates have been on a roller coaster, impacting lending margins and the overall demand for loans. How is TD navigating these shifts? Their recent earnings reports offer some clues, and digging into those numbers, the net interest margin, loan growth, and credit loss provisions will paint a clearer picture. Are they effectively managing risk in a potentially slowing economy? Then there's the competitive landscape. The banking sector is fiercely competitive, with traditional players like TD facing increasing pressure from nimble fintech companies and other large financial institutions. How is TD innovating and adapting to this evolving environment? Are they embracing digital transformation effectively? Their investments in technology and their strategies for attracting and retaining customers in this digital age are crucial indicators of their future success. Regulatory headwinds and tailwinds also play a significant role. Financial institutions are subject to stringent regulations, and changes in these rules can significantly impact their profitability and operations. Keeping an eye on any upcoming regulatory changes in both Canada and the US is essential when assessing TD's investment potential. Furthermore, let's not ignore the valuation. Is TD Bank's current stock price attractive relative to its earnings, book value, and future growth prospects? Comparing its valuation multiples to its peers and its own historical averages can provide valuable insights. A seemingly stable company trading at a premium might not offer the best returns, while a temporarily undervalued one could present an opportunity. Finally, consider TD's dividend history and yield. For many investors, particularly those seeking income, TD's consistent dividend payouts are a significant draw. However, it's crucial to assess the sustainability of these dividends in the face of economic uncertainty. So, is TD Bank a buy? The answer, as with most investment decisions, isn't a simple yes or no. It requires a thorough analysis of the company's financial health, its position within the industry, the prevailing economic conditions, and its valuation. Do your own due diligence. Dive into their financial statements, read analyst reports, and consider your own investment goals and risk tolerance. With that said, thanks for watching and until next time.